In this unit, we're going to talk about cost flow assumptions. This is a continuation of the merchandise inventory. We're still a retailer, but we're going to talk about a very specific part of retailing and how to do journal entries in the retail marketplace. So to introduce this topic, let's first review what we learned about journal entries when we are buying and selling inventory. So the scenario here is, first of all, we purchased $5,000 of inventory on account. And that journal entry is we got inventory, so we debit inventory for $5,000. And then we, if it's on account, we credit accounts payable for $5,000. And then we subsequently sell some of that merchandise, and we sold it to the customer for $2,000, and the merchandise cost us $1,500. So as a review from journal entries we've done before, we have two journal entries. The first one is our interaction with the customer. We did work, and so we got some money from the customer. This one's on account, so we didn't actually get cash, but we are going to debit accounts receivable for $2,000 and credit sales revenue for $2,000. So that journal entry tracks the amount of work that we did. Selling stuff is hard work, and so that's the money that we earned, the $2,000 from the customer for doing that work. The second journal entry is recording the inventory leaving our store. So we are going to credit inventory for how much it cost us, because what is in the inventory account is not what it cost the customer. The inventory account tracks how much the inventory cost us, and it cost us $1,500. And then we debit cost of goods sold, $1,500. All right, so those are the basic journal entries that we dealt with when we had a retail operation. This chapter is answering the question, how did we know it cost us $1,500? So we're looking at those numbers right there. So how do we know we debit cost of goods sold $1,500 and inventory $1,500? Because when we buy inventory, it's not all going to be at the same price. Sometimes we'll buy inventory at a lower price, and sometimes it'll be a higher price. So how do we figure out how much it cost us? So the future videos in this unit are going to cover how do we come up with that number? How do we come up with the $1,500, and how do we know that? So stay tuned for future videos on how we actually figure out that number.